Yeah, so it just looks like I'm not trading, right? It looks like I'm not active or out there just pulling the trigger, which I'm not. It's been what, 3 months? 3 months since I uploaded a trade to YouTube, and really I've just been waiting for a setup, something that's quality. As I was telling you guys before, Q4, that shutdown just pretty much wiped me off the map. Like, I had no model throughout the entire shutdown, and even into the end of the year, I just didn't see what I was looking for in terms of quality. But today was pretty decent, so I want to show you guys how I got into this trade. It was a short, and it was a very interesting short. So what you're looking at right now is what I saw this morning at 8:42. Okay, I woke up at 8:42, and we had CPI at 8:30. So CPI is marked out by these red flags here. All right, so I'm on the 15-minute time frame. And this, massive candle with the long wick, that's your 8:30 news. Okay, so ideally, I'm looking for the reversal setup on one of these levels here, right? So whether it's London session high or London session low, ideally, right, I want to see price go below one of those areas where I can get in on a long position, right? On lower time frames, I'd look for an entry and then take that long to the other end of the range. Well, that actually happened, except that it happened all at once during one candle, right? The news event. And I like to see that sweep at London session around market open or after, right at 10 a.m. news, something like that. But all we had today was CPI. So I had to figure out how I was going to get into this trade. So I basically had to wait for something else, all right? Shortly after news, getting closer into market open, this is exactly what the chart looked like, okay? So if you look at S&P on the left, we have this 15-minute imbalance all the way down here. But if you look at that on NASDAQ, it's right underneath this candle at 9:15. What I was expecting to happen was for price to go into this area, bounce, right? Go into this internal range liquidity, and then exit up here above this external range liquidity, which would have been the high of CPI. Right? That news release high. Okay. Even though I'm anticipating price to go higher, it doesn't mean that I'm going long. And the reason why I say that is because if price had done just that, if it went into this area, held, and went higher above the high of news, that's not my setup. So what I'm actually anticipating is I'm just anticipating this area to hold as support. If it doesn't hold as support, then okay, the other thing that might happen is, okay, price might try to just go straight through it and then reverse from my London session low on NASDAQ, right? Something like that. That's a setup that I'd be looking for, okay? But because I'm looking for this to hold as support, it means that I have to be patient. I have to be patient because a trade from this area just isn't in my model, all right? So here's what happened. I'm just gonna go to the very next candle here, all right? Take a look at this, okay? Starting on the left, all right? So on S&P, we got the reach into that 15-minute fair value gap. Price shows a small reaction. But if you look at that same area on NASDAQ, we go into the 15-minute imbalance. We expand higher as anticipated, but something happens. We fail to reach the external range liquidity, which would have been the previous high, right? The high of news. Why? All right? I don't know. I don't know why we didn't just go ahead and sweep that area. But to me, that's a sign of weakness. To me, when I see that the S&P can't do half of what NASDAQ just did, right? Like the S&P is still a down closed candle. Whereas NASDAQ at least got close to the external range liquidity up there. The failure to get above that area was a short signal for me, okay? So think of it like this. Internal to external. These two areas are linked, all right? So you have the fair value gap on the 15-minute is linked to an old high also on the 15-minute, all right? Internal to external. I am expecting price to go from internal to external. Now, if you look at this last candle, it looks like it tried to happen at the same time, right? This is when you have to go down to the 5-minute so you can actually read the story of what price did from beginning to end. So if I go down to the 5-minute, you can clearly see that the first thing to happen was price go in this fair value gap. That was the first thing. Okay. And it happened right at market open. At 9:30, we went into that area of liquidity, closed bullish, and then we attempted to go after external range liquidity, but we failed. Upon seeing the 15-minute struggle, right? Because I don't know if it's failed completely. But in real time, I'm watching this level fail to be broken, okay? If this is failing to be hit, that means this is failing to be what it's supposed to be. It's supposed to be a strong support. If it's not a strong support, there's a high chance that price is going to drop below this area, okay? And by area, I'm specifically talking about this right here. Why is that significant? This is the lowest point that entered the fair value gap itself. So this would be considered a fair value swing low. Makes sense, right? It's a swing low that's inside of a fair value gap. If I go back up to the 15-minute, you don't see it here because I'm in replay, but the very next candle will show that this is a swing low. So like that. Okay, swing low. So if I just run it back candle, I go back to the 5-minute here. Let me just do this and back on the 5. All right, so how do I get into the short position? What do we have here? We see that this 15-minute area is looking like it's failing to hit external range liquidity. The S&P couldn't even bounce from this area. It's still like right at the imbalance itself. What do we have? If I go down to the 1-minute, I'm going to go into replay here. Take a look at this. This is what price looked like when it was on its way up, leaving that 15-minute imbalance, right? That 15-minute fair value gap. Look at how close it is to the external range liquidity, right? This previous swing high was the high of news. Okay, just running that back. Right there. That was the high of news. And price is trying to take out that level. What do we have in this run up? This last run up here. What I see are a couple fair value gaps, but the one that sticks out to me is the biggest one here. This one right here. That also overlaps with these two down closed candles right here. So you have these two down closed candles and then this massive bullish candle right here. This impulse of a move after having these two down closed candles. That to me is an area of strong support because that's where a lot of buying came in. As price rolled over, as you can see right here, we go into the smaller fair value gap right here. The one that I'm not really paying attention to. This little area right here. We go into that, but my focus is on this one, okay? As I go forward in time, boom. At first, we showed a reaction from that smaller fair value gap, but then the very next minute, price just runs straight through it. So I just wiped that off the chart here. This is what caught my attention. Price drops all the way through that 1-minute fair value gap. Remember, this right here is a bullish fair value gap that I have marked out. It's not supposed to do that. It's supposed to support price, just like the 15-minute. Same thing on the 1-minute. This one looks to be failing because it can't even support the first test. As price comes into this, it can't even support it. We're going all the way through it and closing. So here's the thing. If I wanted to take a short position, what confirmation am I looking for to take a short from this area? It was all within these two down closed candles. What I did was I just drew out from the body, from the high to the low of those two down closed candles, drew that out in time. Now just change it to a color you can see. This became my focus. With nothing else in this area except that blue box, the one thing I was looking for was one candle from the 1-minute time frame to close below the body of these down closed candles, right? These two down closed candles here. I just wanted one candle to close below the body of the lowest one, right? That would be this one here, not this, because these two candles together would be one candle on a higher time frame. So I'm looking at these two candles as one, and all I want is a candle over here to close below the body, right? That would give me framework for a short position. So I'll go to the next candle, take a look, no close, right? We're starting to show a little bit of reaction, right? A little bit of bullishness, but no close. Go to the next candle, look at this. We drop, but still no close. I want to see a 1-minute candle close below this blue box, okay? Next candle, still no close. It's another bullish, it's a bullish candle, right? Go to the next candle, still no close. So I'm watching this chop happen, candle after candle, minute after minute. Next candle, boom, there's the close, right? Now, if you look at this candle, it looks like it could be an imbalance that could form, right? And that's what happened. When this candle closed like this, the very next minute it opens, right? My focus was on taking shorts from the block though. That was my focus. But yes, the very next candle did give an imbalance. I put my entry on that area, right? I'm going short. Where does my stop go? My stop for this trade went right above the previous swing high, which was right here. That was the last swing high right before we got this close. All right, that bearish candle that closed below that box. Now, where's my target? I targeted 3R. That brought me very close to the London session low, which was right here. Now, this was a little bit higher on trading view because I was a little closer, but I'm gonna show you everything at the end of this video, this breakdown. So we got the closure below the bodies of those two down closed candles. We got a bearish fair value gap. The very next candle gives me the entry. Look at the drawdown. We didn't break the previous swing high, but I get the entry. So why does this make sense again? Why would I take something a short like this? It all started with the 15-minute time frame. The 15-minute time frame where price tested a 15-minute bullish fair value gap, expanded higher on NASDAQ, but failed to hit external range liquidity, okay? If that is failing, it's likely price is going to want to come back below the fair value swing low. If it goes below the fair value swing low, then it's likely going to continue seeking liquidity lower. So what did I do to get in? I went straight to the 1 minute time frame and found the very same thing happening. I found a 1 minute bullish fair value gap that was also failing to hold as support. The only difference is I used the 1 minute failing bullish order block to frame a setup to go short. Okay, so like a reverse order block here. Instead of buying off of these two down close candles, I waited for price to close below it and sell from it, sell from underneath. From there, I'm in the trade, right? Nothing I can do. So I'll just hit play. Price went back up again, right? Back up into what? That block. Back up into that block, chopped around. All along, take a look at S&P, slowly melting while I'm sitting through chopping my trade. Price is heading towards the news low on S&P. I'm nowhere near the news low on NASDAQ. News low is all the way down here, okay? But I'm calm, and I'll hit play. And eventually, I got out of that trade. Even after price rebounded, I still thought that price would go below my London session low. So I was out of the trade on Trade Locker, but here's the rest of that trade. Right there. Price eventually made its way all the way down below London session low, but in this area was my trade. All right. So here is the screenshot of Trade Locker, and then I'll show you the recording. Right. So you can see again, there's that 1 minute fair value gap. Just move this just to the left a little bit. 1 minute fair value gap. There it is on Trade Locker. Price gets me in on the spike. Right. You can see that over here, that spike. And then from there, once I'm in that trade, I put my stop below the previous swing high, and I'm in it. Right. Whatever happens after that happens. Okay. But that was my trade from this morning, and here is the full recording.